guys. So today we have Matthew Liu, who is co-founder of Origin Protocol, and this is a company which started as a commerce platform on blockchain, and now they pivoted as well to NFTs, and they have as well their own stablecoin. And one more exciting news, during this day they have a snapshot till 12th July for the airdrop of their new token. So great to have you here, Matthew.
Thank you so much for having me. I'm really excited to be talking with you and sharing some news about Origin with your community. It's super exciting time for us, so the timing couldn't be better.
So can you tell us about your background and which year did you get into crypto and blockchain? How did you get started?
Yeah, so I've been in tech startups pretty much my entire career. I was one of the early product managers at YouTube in the Web 2.0 phase. And ever since, I've been hooked on emerging technologies and just been very experimental and playing with whatever new trends happen. So I think I first heard about Bitcoin in 2010 or 11, but largely ignored it.
Totally.
Yeah, I didn't really get it though, but I did purchase a few Bitcoin in 2012, and that's kind of how I got started in crypto. But it wasn't until 2014 that I think really made a difference, because at that time I participated in the Ethereum ICO. Again, didn't have full understanding of what was going on, but just threw some money at it because people that were smarter than me told me about Ethereum. I was like, all right, I don't know what this is, but it's interesting, and I trust other technologists and innovators. And then in 2016, when the Ethereum DAO hack happened, there was a lot more news about it, and I was like, oh, wait a minute, I invested in this thing, I totally forgot about it. Let me retrieve my wallet and figure out what's going on. And it turned out the Ethereum that I had was like, reasonably substantial. I was like, oh wait, like, I put a small amount of money in here, but now it's, worth quite a bit more. Like, what's going on, right? Like, why is there a community here? What does this technology actually do? And so that started getting me, much more interested about blockchain crypto as a potential area to build companies in. And so from there, the first year or so was largely around trading cryptocurrencies. My co-founder, Josh, and I, we built some bots, we built our own portfolio management tools just to get deeper into the space. And in 2017, we decided, hey, it's time to go all in. We really believe in the technology. Despite Ethereum being slow and expensive at the time, we imagined a world where decentralized ledgers and the applications that could be built upon them would transform pretty much every industry on the internet, right? And so that's when we started Origin in 2017. The original mission was to build a marketplace protocol that allowed any type of commerce on chain. So buyers and sellers could meet and exchange goods, whether they're on-chain goods or on-chain assets, or off-chain goods or services. So it's a pretty broad vision centered around commerce. What we realized is that we were way too early. There weren't that many people with Web3 enabled wallets. The bear market hit soon thereafter, and just interest in the tech and the space cooled down for quite a bit. So we ended up building the marketplace protocol, eventually ended up pivoting and deciding to focus more squarely on crypto native audiences that were doing transactions. And that's kind of how the NFT platform was birthed, right? So it's commerce, but it's specific to NFTs that are digitally traded on chain, and is much more easy to find demand for that. So that's the birth of Origin Story, or NFT platform that has served creators like Paris Hilton, Jake Paul, a bunch of musicians and producers like Cashmere and Blau and Don Diablo, as well as NFT artists like Trevor Jones. And we're now expanding the product suite to work with a bunch of very exciting collections. There's about a dozen new partners that are going to launch on us in the very near future. And then beyond the NFT stuff along the way, we also ran an experiment called OUSD. And this is a DeFi stablecoin that automatically earns yield from a number of underlying protocols. And lo and behold, both our NFT platform and OUSD started working. And so we ended up in this very interesting position where we had two protocols, two products, and now two business units that are pushing these forward to the community. And so we have Origin Story and Origin Dollar. And I think very relevant to this audience is our upcoming launch of the OGV governance token. And so the way that we've decided to structure things going forward is that the NFT platform will have OGN, or existing token, as its value accrual token. And then on the other side, Origin Dollar, OUSD, it has a new token called OGV, which is the governance and value accrual token for that. And that's launching early next week. And so super, super exciting times, lots to do. We're excited to share with your community and do these launches and bring everything to market.
So what are the conditions of getting this airdrop? And it's written that the snapshot is from 5th till 12th July. So if people buy now OGN token and hold it on the exchanges, do they still have the chance to get this airdrop?
Yeah, so there's a snapshot window that began at July 5th, midnight UTC time, and right after July 7th. And the window is from July 5th to July 12th. UTC. And so we're going to take one random block in between that 7-day window to snapshot. And
so it
users
will be simultaneously one snapshot for all the users, or like it will be differently?
That's right. There will be one block that's picked to be snapshotted in that window for all users. And so all wallets holding OGN at that time will be able to claim OGV one-to-one, so 1 unit of OGN will be able to claim 1 unit of OGV. There's also a number of centralized exchanges that are supporting the airdrop, including Binance, Upbit, Huobi, Gate, KuCoin, Paraboo, and the list actually goes on. It's published on our blog post. But yeah, all these centralized exchanges will be supporting the airdrop as well. And so if you're holding OGN on those exchanges, then you'll be credited OGV. And so we're super pumped about the launch. The actual snapshot block has not been picked or revealed yet, but it will happen sometime between the window of July 5th, which I started, and July 12th, which is coming up in a few days.
Yeah, so people still have a chance to get the airdrop if you just get and buy OGN tokens now. So what's the utility of OGV token? How will it be used?
Yeah, so OGV stands for Origin Dollar Governance, and that means that it's going to be the governance token for the OUSD protocol. So I'll take one step back to explain OUSD again. So OUSD is a stablecoin. It's backed one-to-one by USDC, USDT, and DAI. So people can basically trade in their other stablecoins for OUSD. And then what happens is then the OUSD protocol goes to different DeFi platforms like Convex or Aave or Compound to earn yield as well as reward tokens. And as that yield is accumulated, it actually causes OUSD to rebase and increase in units. So in layman's terms, let's say I sent you 1 million OUSD today. A year from now, in your wallet might be 1.2 million OUSD. You wouldn't have had to do anything. So the protocol automatically harvests the yield and increases your balance. And so we like to think of it as like DeFi made simple without all the hassles. And so OUSD is earning for you while you're sleeping. You don't have to actively manage your DeFi positions by staking and unstaking capital. The decentralized protocol that is OUSD does this for you. And now, because it's decentralized, we want a governance token, right? And so OGV is the governance token that allows holders to help allocate strategies, determine fee accrual to the platform, and a bunch of other on-chain governance features. And so OUSD today is taking 10% of the yield that it accumulates and redirects them or will redirect them as soon as OGV launches to OGV stakers. And so in a nutshell, if you hold OGV, you can stake it and turn it into VEOGV, similar to like the Curve model. And then that gives you governance privileges as well as fee accrual privileges. And the longer you stake your OGV, then the stronger your voting power from a governance perspective, and also the stronger your economic power from a fee earning perspective.
And what interest do you currently offer on staking?
There's a couple different numbers. So OUSD itself offers yield. That yield changes in real time. You can check it out at analytics.ousd.com. But on a 365-day basis, OUSD APY has hit it's 12% for the last year. Now, that's just OUSD earning yield, right? OGV is going to earn yield as well. So the OGV yield is going to be 10% of that OUSD yield directed to OGV stakers, as well as additional OGV that we're giving out in incentive programs, right? Similar to other DeFi protocols. And so when you go to the OGV staking page, you'll actually see the real-time APY at that moment calculated for you. And so you'll be able to kind of see what that is. At launch, we anticipate the initial APY to probably be like, 3 digits percentage APY. And then it'll be variable depending on how many people are staking and how much yield is coming from the OUSD protocol over time, as well as how much additional OGV the protocol is emitting to stakers. And that last piece, we're setting an initial value, but it's going to go to decentralized governance, right? And so OGV holders will they themselves be able to say, hey, like we want to increase the APY that stakers are getting, or we want to decrease it over time. And they'll be able to vote on these things and affect the APY throughout the duration of the staking program.
And currently, there is quite a fear on the market related to stablecoins, and see the total crash of Luna USD stablecoin and as well of the Luna token, and there as well offered like 20% of API. So how is your API sustainable? And as well, you are backed by basically 3 other stablecoins which are decentralized. So how do you ensure that it's really stable and like you are dependent on those other stable coins and they may go down the same as happened with Tether, it went down a bit?
Yeah. So this is a really great question. I'm glad you asked it. So OUSD is very, very, very different from UST, which is the stable coin on the Luna. UST was I guess like the twofold death spiral that destroyed a lot of value. I'll talk about UST first, right? So UST wasn't really backed by any real underlying assets. It was just backed by the Luna token, right? And Luna token itself was a speculative token, and the price was going up because people were using it to create UST, and it was kind of this reflexive property. The higher the price of Luna, the more UST you could mint, and then the more UST in supply, people became more bullish on Luna, and the price of that went up. But it wasn't really ever backed by anything substantial, right? And it always had this fundamental flaw, which is if the prices started coming down, then it would be a death spiral. And so, again, not backed by anything. It's just like virtual stable coins using an algorithmic style backed by another virtual currency, Luna. And so when that death spiral started happening, it accelerated really quickly and destroyed something like $20 billion of market value, maybe 30 between Luna and UST, and completely destroyed that ecosystem. On the OUSD side, there are a couple of notable differences. Again, OUSD is one-to-one backed by USDC and USDT and DAI. These 3 stablecoins have kind of stood the test of time and have maintained peg quite well throughout both bull and bear cycles. There have been momentary instances where there's a slight depeg, but nothing like what's happened to USC. And that's because of several reasons. One, USDC is mostly backed by US dollars, USDT as well, although there's a slightly higher risk because of their commercial paper balance. DAI is actually over collateralized. You need at least $1.5 to mint $1 of DAI. And Ethereum is a much more, despite its volatility, has a lot more use cases and utility and intrinsic value than Luna. And so the chances of DAI losing its peg are much, much lower than UST. So as a result, these backing stablecoins, like the three most popular successful stablecoins themselves, lead us to believe that there's much more confidence that OUSD itself will also not depeg, because the underlying assets are themselves maintaining peg and have maintained peg for a very long time, and have demonstrated sufficient growth in circulating supply and stability over the last 5 years of crypto. Now, where does the yield come from? Well, the yield comes from established protocols, right? And so the yield is coming from places like Convex, that's using Curve to generate trading fees and AMMs, or it's coming from like Compound or Aave from lending and borrowing. And so these are real transactions that are happening on chain, and so those yields are due to user activity of real users, putting up their collateral to borrow, or other real users trading cross Curve and generating those trading fees. And of course, it also includes the reward tokens for these platforms. But there's no reason that any of that should go to zero, right? On the UST and Luna side, the primary yield was coming from Anchor, where the yield was basically being manufactured out of thin air. There wasn't actually a protocol where there was real commercial activity by a bunch of users. And so it was largely subsidized by the foundations. So basically, in summary, what happened with the UST and Luna thing was a house of cards that was bound to fail. It wasn't backed by any real assets. It was a very highly reflexive, I would almost say a very elegant Ponzi scheme. And we saw what happened when everything broke down. On the OUSD side, backed by very legitimate, proven stablecoins, and also the yield activity is backed by real activity by real users across established DeFi platforms. And so we maintain that we're in a much better position than UST ever was in terms of security and sustainability.
And as well, what's the percentage of backing by DAI, USDC, and USDT you have?
Yeah, so this is all available in real time at analytics.ousd.com. So right now, the primary backing is DAI. Let me just look at this calculation really quickly. So it's about just about 59% in DAI, less than 1% in USDT, and the rest of it is in USDC. That's about 41%. And so this is another advantage of our protocol. There were some rumors of a USDT potential depeg, which we haven't seen, but through an abundance of caution, through decentralized governance and safety mechanisms, the USDT portion of the backing has been reduced to less than 1% at this point.
And for getting an API on holding your stablecoin, people just need to hold it on the wallet. They don't need to put it on any protocol.
That's correct. All you need to do is be either minting or holding or buying OUSD. So you can mint at OUSD.com. It's a very simple experience. You connect your wallet and you can convert your DAI, USDT into OUSD. Or you can get OUSD on a decentralized exchange. So the Curve pool is probably the one with the highest liquidity and lowest slippage right now. Best balanced pool. So if you just go to the OUSD pool on Curve.finance, you'll be able to purchase there in a decentralized way. And if you want to purchase on a centralized exchange, KuCoin and Gate are probably your best bets. And once you get the OUSD, you don't really have to do anything. The APY will be generated and delivered to your wallets automatically several times a day. And so literally you can just hold it for a year, set it and forget. And then at the end of the year, check your wallet and the balance should be significantly higher.
So which assets do you put then into all the DeFi protocols and earn yield if your stablecoin is in the wallets of the users?
Oh yeah, so again, let's say someone's coming to mint OUSD, right? They have DAI, USDC, or USDT, right? They either swap for OUSD or they mint OUSD. Those three stable coins that are backing USD enter the OUSD strategy vault, right?
Mm-hmm.
And then from there, the smart contracts deploy the USDC, USDT, and
Mm-hmm.
DAI into Aave or Compound or Convex. There'll be future strategies as well. And then those underlying stables are earning the yield. And when that yield re-enters the OUSD smart contracts, then the smart contracts do the rebasing calculation and then credit OUSD for the additional backing stablecoins that are in the vault. So you really just buy it or mint it, and then the yield automatically accrues to you.